Hello again, AIS students. Today I'm going to be talking about the Purchases Journal and the Cash Disbursements Journal. So at this point you should be done with the Sales and Cash Receipts Journals, and so I probably have less to explain this time around because the journals are probably beginning to become familiar to you. In the Purchases Journal, again, just like the Sales Journal, these purchases are only for purchases on account. So what that means is purchases of inventory, where we're buying goods that we're going to turn around and sell, so purchases from our vendors. We also have vendors who sell us things like office supplies or fixed assets like computers. So office supplies, fixed assets, and inventory that we're purchasing on account are what goes into the Purchases Journal. So if you take a look at the Purchases Journal, you pull that out. Again, probably don't need me to show you this at this point, but in the journals book, it's the fourth journal, the Purchases Journal. Very similar layout to the other journals. So you have the vendor invoice number, the vendor, the date. You have purchases, so that your debits are to purchases and to other accounts, such as office supplies or fixed assets. So if you purchased office supplies or fixed assets on account, you would put those account numbers right here. And then your accounts payable, of course, is your credit. So purchases on account for credit are credit to accounts payable. Right here you put in the subsidiary account number for the vendor. Okay, so you did that on the sales journal as well for sales on account. You put the subsidiary number for your customers. This is the opposite. It's the subsidiary number for your vendors. So we'll look at that in a little bit in the accounts payable subsidiary ledger. Also out here all the way to this side of the journal are purchase returns. So if you were to return things that you had purchased, that's where that would be recorded. So again, your debits have to equal your credits. It needs to cross foot this way. At the end of the month, you'll do what you see here in November and December. You'll add up the totals and post the totals to the accounts. The only exception, again, is this other column. You'll post those individually to the accounts that are listed there. So again, that was office supplies or fixed assets are what go there. Okay. Otherwise, it's purchases of inventory. Not going to have a whole lot of transactions in that journal for the month of December. The big one is your cash disbursements journal, which is the next journal. So again, just like your cash receipts, cash disbursements are just that. It's disbursements of cash, meaning cash leaving the company. In this case, they've associated all these with a check. So you wrote a check, cash left the company. Okay. So all times that you pay cash for anything, that means anything. So anything you pay cash for has to be recorded in the cash disbursements journal. So again, you have the date. In this case, you have a check number. One thing you'll note is that for payroll, you have the payroll in a separate journal. So they record the check numbers here, but not the amounts, because the amounts are shown in the payroll journal. The only reason they even put it in the cash disbursements journal is so that you can keep track of your check sequence, meaning you've made sure that you've written down every check that you've written in the cash disbursements journal. So that just keeps track of what are those checks that you wrote those payroll amounts for, and then you would see the amounts over in the payroll journal, which would be in a future assignment. Okay. So as you're writing down check numbers, just keep them in sequence, however you're doing them. And you actually have some checks that you'll fill out in the documents. You probably will run out of checks, which is okay. Just use checks until you run out, okay? And then after that, just write down the check numbers that you would have used if you had checks, which obviously you would. So in this case, I think you're going to run out of checks at some point. So just use as many as you have in the documents that come with the practice set. And then after that, just write down the check numbers, okay? So again, the structure of this is very similar to what you're already used to. On the credit side, every transaction is going to have a credit to cash, because again, it's a cash disbursement, cash is going down, credit to cash. So you see the credit column for cash. Also in the credit, you have purchase discounts. So this is if you pay a vendor early and take advantage of cash discounts. So just like in the the cash receipts journal, where you offered sales discounts to your customers, you have the same option with your vendors, where you take a vendor discount, which is called a purchase discount, for paying them early, a cash discount. So that relates to those terms, 210, N30, or 110N30, 310N30, those percentages that you take as a discount for paying early. Okay? So remember, in those cases, the amount that you actually pay is less than the payable. You have to remove the full payable from your accounts payable. The check will be that amount less the discount. So these two credits equal the debit to accounts payable. Okay, so if you see over here are all the debits, here are the two columns for credits. Okay, so paying payables, debit to payable, credit to cash. If you take the discount, there's a difference there that you can see how that works. Again, these get posted to the accounts payable subsidiary ledger, meaning you show the detail by vendor as the amounts are going up or down. So in the purchases journal, you increase payables, and the cash disbursements journal, you're reducing payables when you pay them. Okay, so you need to reflect that in the accounts payable subsidiary ledger, which we'll look at in just a second. Then you have your freight account. And then over here, which in this particular journal, you'll have the most of any journal in the other column. So you're going to have a bunch of stuff in this other column, which is anything else that you're debiting that's not a payment of payables. So you may be paying, in this case, you paid some payroll taxes. You may be paying some freight. In this case, you showed freight, actually. Credit, cash, debit, freight. Other things that you'll pay would be various different types of expenses. You might pay rent, which is, I think, this one's here. You got rent, you've got different things in your general ledger that you'll pay, and you'll put them into these, what are mostly going to be expense accounts. Just like in the cash receipts journal, you'll have one transaction that'll require you to put two amounts in the other column, and those two amounts are going to relate to insurance that you're paying at the end of the year. So you'll have a component of that payment that's prepaid insurance, and a component of it that is insurance expense. So you'll list those two amounts out, one after the other. In total, they are going to agree to the amount that you paid in cash, but you're going to show them as two separate lines. So you'll skip a line before you do the next cash transaction after that one. That'll be near the end of the year, so watch out for that. Just like in the other journals, here's November cash disbursements journal. You see that they posted the totals. So again, this total reduced cash. This total went to the purchase discounts. This total reduced accounts payable. This total went to freight. And then these each individually went to each of these individual accounts. So when you post them over, which I'll talk about in the next video, you're going to take each of those individual amounts over into the general ledger. So here is December, and you're going to have to remember to do these, which I'll mention that again in the next video. But you're going to post things into the general ledger after you record everything for the month of December. Okay? So let's take a quick look at the accounts payable subsidiary ledger. So that's in your ledgers and instructions book, this one. So that's right actually at the end of the general ledger before your accounts receivable subsidiary ledger. So it's right here on page 37. And there's only 3 vendors, okay? So you'll see their vendor invoices and then checks where we've paid them, paid the amounts that were due, okay? So you have some that have an old balance. In fact, I think it's just this one that has an old balance. These other 2 have no balance at this time. But you'll have additional transactions in December that you'll record in these vendor subsidiary ledgers, okay? So again, the total of these 3 have to equal what the balance in accounts payable is on your general ledger, all right? I'll talk about in the next video the month-end and year-end procedures for purchases and accounts payable. But remember to look at your reference book, read the chapters in that are referenced in your assignment list. So again, your assignment gives you reference books chapters. So in this assignment number 3, it's chapters 4 and 6 in the reference book. So take a look at those chapters in the reference book. Okay, and in the next video, I'll talk about the month-end and year-end procedures.